Poultry producer VENKY'S faced a multitude of challenges in 2020 as volumes and realizations plunged during the initial phase of the COVID-19 outbreak. Despite the pandemic causing major business disruption, the recent quarterly performance indicates healthy recovery with strengthening operating and financial trends. In the first half of FY22, VENKY'S top line grew 67% year-on-year on a favorable base. Revenue growth was largely led by stronger realizations as volumes of broiler chicken were largely unchanged on a YOY basis. However, profitability continued to be under pressure due to a steep rise in input prices. Nationwide lockdown and rumors of poultry birds being possible vectors of the virus led to a significant drop in volumes and realizations throughout 2020. However, H1 FY22 volume trajectory across verticals indicates that demand has finally stabilized. The poultry industry is gradually returning to normalcy, and broiler chicken prices, which had come down to around 30 to 40 rupees per kg, have surpassed the pre-pandemic levels on a pan-India basis. The recent rise in prices has been driven by a combination of factors including a change in demand-supply dynamics and a spike in input costs. The supply has been curtailed as several poultry farmers who've suffered huge losses during the pandemic have gone out of business. While industry production levels have come down, meat consumption has improved with the reopening of bars and restaurants. VENKY'S profit margins in the first half were under severe pressure due to higher poultry feed prices. The average soya price in Q1 stood at 64 rupees per kg and went up to 84 rupees a kg in Q2, reflecting a steep jump from 35-40 rupees levels last year. Going forward, margins are likely to normalize as the prices of soybean have started coming down following recent government interventions. After soybean prices touched the historic high of 100 rupees per kg against the minimum support price of 39 rupees a kg, the central government for the first time ever allowed import of genetically modified soy meal, the main feed of poultry, cattle and fish. The government has also imposed stock holding limits on soy meal in a bid to control prices. Government measures have improved supplies in the domestic market and soy prices are currently hovering around 48-50 rupees a kg. VENKY'S recently completed the capacity expansion of its solvent extraction plant at Srirampur in Maharashtra and expects to ramp up production over the next 12 to 18 months. There's no major CAPEX planned over the next 2 years as the company has sufficient production capacity across all its business verticals. The yearly investment outlay is pegged at 40 to 50 crore rupees, of which majority will be used to upgrade and revamp existing facilities. While some working capital issues had an adverse impact on the cash flows during April to September period, the balance sheet overall appears to be in decent shape with a debt-to-equity ratio at 0.2x. Domestic poultry sector is expected to grow at a steady pace of about 8 to 10% on the back of increasing consumption of non-vegetarian food. Being a market leader and a key supplier to major fast food chains, whether it's KFC, Pizza Hut, Domino's or even McDonald's, along with dine-in restaurants, VENKY'S certainly stands to gain from secular industry trends. Now, looking at the valuation, the stock is trading at a reasonable valuation of nearly 11 times its FY23 estimated earnings. The business remains well poised for recovery and profitability, and long-term investors definitely can look to accumulate the stock on every dip. Of course, a risk to watch out for will be fresh instances of bird flu and lockdowns or restrictions which could have an adverse impact on the business operations and therefore on the stock price as well.